The VA appraisal is one of the most misunderstood parts of the entire VA loan process. Veterans tend to confuse it with a home inspection. Sellers fear it, and when the number comes in lower than the purchase price, a lot of buyers have no idea what options are available to them. So in this video, I'm going to be breaking down 7 things that every veteran needs to know about the VA loan appraisal before they go under contract and the clock starts ticking. If we haven't met yet, my name is William Ware, the Loan Caddy. I'm a GWAT veteran, currently still serving the Army Reserve. For the last few years, I've been a mortgage broker specializing in VA loans. And this video is part of my VA Loan Masterclass series where I break down this benefit in plain English. So without further ado, let's get into today's video. So here's what we're covering: what the VA appraisal actually is and what it is not, how the process works from order to completion, what appraisers are trained to look for, what happens when the value comes in low, and how veterans can protect themselves when the appraisal creates a problem in the transaction. Number 1, the VA appraisal is not a home inspection, and I can't stress this enough. We've said it before in the series, and we're going to keep saying it because the confusion is widespread. The VA appraisal has 2 jobs, and only 2 jobs. Estimate the market value of the property and note any obvious conditions that don't meet the VA's minimum property requirement. That is it. That is the only thing that the appraisal is supposed to do. The appraiser is not going to be testing every outlet in the house. They're not running every faucet in the house. They're not checking whether the HVAC was actually serviced last year. They're also not going through the attic with a flashlight looking for things like insulation issues. They're doing a market value assessment and a visual review of obvious conditions. A licensed home inspector who does the deep dive. The appraiser is not the person to do. Veterans should always get a real home inspection because the appraisal does not replace it, and it was never meant to in the first place. Number 2. The VA appraiser is assigned by the VA, not chosen by the lender. This is different from how conventional appraisals often work. When a VA loan is involved, the lender orders the appraisal through the VA's appraisal management system. Then, the VA assigns a licensed appraiser from their approved panel for the geographic area. The lender does not get to pick their favorite appraiser that they always use, and the realtor does not get to suggest somebody that they've worked with before, and the veteran does not get to shop for a number. The appraiser is independent. That's intentional, because it protects the veteran and the integrity of the VA's guarantee of the loan. Number 3, the VA appraisal establishes the VA's opinion of value, not necessarily the final word on what the home is worth. And that's an important distinction because if the appraiser determines the home is worth less than the purchase price, the VA will only guarantee the loan up to the appraised value. That does not automatically mean the deal is dead though. It just changes how some things have to be done. Either the seller can reduce the price to meet the appraised value, or the buyer can pay the difference between the appraised value and the purchase price out of pocket. Or the buyer could do something like challenging the appraisal through a process called reconsideration of value, or they could just walk away completely using the escape clause that's built into every VA loan contract. We'll come back to the low appraisal situation in a moment because it's really a big deal and deserves its own explanation. Number 4, the appraisal timeline varies by market. One of the top complaints about VA appraisals in certain markets has been turnaround time. In high value markets or rural areas where fewer VA approved appraisers are available, the timeline to get an appraisal completed can take a little bit longer than a conventional appraisal. This is a real consideration when writing a contract and setting a closing time. In most markets today, the VA appraisal process is competitive with conventional timelines, but in certain areas, it can run even longer. Your lender should know what the typical appraisal timeline looks like in your specific market. That information should be factored into your contract dates before you are under contract, not after. Number 5, the appraiser will note required repairs if they exist. When the appraiser identifies a condition that does not meet the VA's minimum property requirements, it gets noted in the appraisal report as a required repair, and the loan typically cannot close until that condition is resolved. Now, we covered this in detail back in the minimum property requirements video, but the short version is that required repairs create a negotiation between the buyer and the seller. Check that video out if you want to know more about the minimum property requirements. So now the seller can either fix it, the buyer can negotiate a credit, or the buyer can even have it done before closing in some cases. Or the deal will just fall apart if no resolution is reached. The appraiser is not creating the problem, they're just the ones documenting a condition that's already there. Number 6, the Tidewater Initiative is something that every veteran needs to know about. If the appraiser believes that the purchase price may be higher than what the market data supports, they can invoke what's called the Tidewater process before they complete the appraisal. When Tidewater is invoked, the lender and the parties of the transaction have a short window to provide additional comparable sales and supporting information to the appraiser before the appraisal is finalized to justify the value. Now, this is not a guarantee that the value will come in at the purchase price, but it is an opportunity to give the appraiser data that they may not have had access to on their own. If your realtor gets a Tidewater notice, they need to move quickly and provide the strongest comparable sales available. Time is limited and the window to respond does not stay open long. Number 7, the escape clause protects the veteran when the appraisal comes in low. Every single VA purchase contract is going to include what's called the VA escape clause or a mandatory clause. This provision gives the veteran the right to walk away from the transaction without losing their earnest money deposit if the appraised value comes in below the purchase price and the parties involved cannot come to an agreement to make the transaction whole. Now, this is built-in protection that exists specifically because the VA doesn't want veterans locked into paying more than a home is worth with borrowed money as zero down. If the appraisal comes in low and the seller's refusing to negotiate and you don't want to take the difference out of your pocket, the escape clause gives you a way out. But make sure that you understand this clause is in your contract and make sure that you do not waive it without fully understanding what you're giving up. So here's a reality check. Low appraisals happen, required repairs happen, Tidewater gets invoked, and they are not rare events. They're not automatic deal killers. What separates a deal that survives an appraisal issue from one that doesn't is usually the quality of the team and the speed of the response. A realtor who's got the knowledge and skills to pull strong comparable sales, a lender who understands how the reconsideration of value process works, and a buyer who understands their options before the appraisal even comes back. That combination can handle appraisal problems. A team that is learning the process as it unfolds typically cannot. So, in summary of everything that we talked about in today's video, the VA appraisal is a value assessment and a property condition review. It's not the home inspection. The appraiser is assigned by the VA, not chosen by the lender. The appraisal establishes the VA's opinion of value, and the loan cannot exceed it. Timelines may vary by market and should be factored into contract dates, and required repairs must be resolved before closing. Then, the Tidewater process gives parties a window to provide supporting data before the appraisal is finalized. And lastly, the escape clause gives veterans a protected exit if the appraisal comes in low and no resolution is reached amongst the parties of the transaction. Understanding how the VA appraisal works before you're under contract puts you in a much better position than learning it in the middle of a problem. If you have questions about how the appraisal process works in your specific market or how to structure a transaction to reduce appraisal risk, that is exactly the kind of conversation that's worth having before you're in the middle of a deal. The next video in this series is going to be covering residual income. It's one of the most unique and least understood parts of VA loan qualification. And it's one of the reasons that the VA loan has one of the lowest default rates of any mortgage product. And most veterans have never even heard of it. So we'll see you on the next hole.